A brighter financial future can be found in the money-making machine. Wouldn't it be great if we all had our own personal money-making machine? Truly wealthy people actually have these, and they function phenomenally. What, you may ask, is this mysterious machine? Basically, it is the process great wealth is generated. Every month, if your machine is working properly, you gain wealth and income with minimal work. Now, I don't want you to think that it takes minimal work to set one up. On the contrary, it could take years of hard work and investing in order to build one of these properly. Once built, your income rises every day and your tax burden eventually goes to zero, or even better, the government pays you money. Basically, you tax the government. That all sounds good in theory, but how can one of these money-making machines be set up? Well, the good news is that one can be created, basically from thin air. And as long as you have an income, a fun thing called compound interest comes into play. What is compound interest? This is the money you generate from your money. When we make investments into real estate, the markets, commodities, and currencies, we are building our money-making machine. These are called assets, and assets bring money into your pocket. Remember to always hodl. Hang on for dear life. That means buy and never sell under no circumstances. Each dollar you put into your machine creates more wealth. If you were to put away $100 per month and build a decent portfolio, eventually you can buy real estate for cash. Just because you live in an area where costs are prohibitively high is not an excuse. There are plenty of real estate markets across the country and world that are much more affordable. For example, a triplex on the California coastline will set you back anywhere from $500,000 and up. But if you were to purchase the same property in the Midwest, the cost may be only $80,000. Saving $100 per month can actually afford enough money to purchase the cheaper property. The question is, where do you store your money? The market? Bitcoin and other cryptocurrencies? Commodities such as gold and silver? A bank account with a high yield interest? Well, depending on the risk you're willing to take, will result in higher returns. I prefer to store my cash in cryptocurrencies and commodities until I can afford to purchase a property. Cryptocurrencies are nice because you can store them and earn a high rate of return, higher than any bank account I know about. What about the risk of permanent loss? It's always a possibility. That's why holding some gold and silver is always a good thing. If you hold your money in the market, be careful what company you choose, as some companies could go bankrupt and no amount of hodling will save your assets through a company becoming insolvent. Basically, that means the company goes completely out of business, the stock price goes to zero, and the stock is removed from the market. You might ask, can this happen to cryptocurrency? That depends on which currency you choose. It is true, Bitcoin's value could drop, but it will never go away. It is a decentralized digital currency which is distributed across the entire world, and even if a large country were to ban it, there are so many other countries in the world. This is where hodling comes in. Hold on for dear life. That means if the price goes way down, it's time to buy. Get as much Bitcoin as you can when the price is low. When the price goes up, and suddenly you find yourself a millionaire, it could be time to sell some off and put your money into a property. I own an apartment building, which I use heavily for a tax write-off. The taxes on $1 million would regularly be astronomical, but putting your money into a property removes your tax burden, and this is why I have property in my portfolio. Property in America really is a tax haven. So, how does this all become a money-making machine? Quite simply, you use your cryptocurrency to generate an interest, say 12% APR. That adds up quickly. You rent out your property and now you are collecting rental income. Invest some money into solid companies that trade on the stock market, which return a dividend payment.
If you are on this website, you like cryptocurrency. So here's another hint. Instead of buying physical gold, buy a cryptocurrency called Paxos Gold, or PaxG for short. This crypto is tied directly to the price of gold, and each token represents 1 ounce. The gold is stored in a secure vault in the United Kingdom and is audited by the government. Therefore, it is an extremely reliable token.
Take the PAX G and send it to another Swiss company called Nexo. You can actually take out a loan against your gold. So if you were to deposit $100,000 of PAX G, you can receive $70,000 in cash to buy a property. This trick is awesome because you can buy a triplex with that money, collect rents, and use the money to buy more cryptocurrency. Your money will compound and will add up surprisingly quickly. Remember, this all started with an investment of $100 per month. Before you realize it, welcome to the Millionaire Boys Club. I'm going to summarize the money machine in a few simple steps. 1. Save up money any way you can, even if that means getting a side job delivering pizzas or selling stuff online. 2. Buy cryptocurrencies and get a high interest payment on your saved money. 3. Once you save enough money, buy PAX G or another commodity token. Take a loan off that. 4. Buy an apartment building. 5. Save even more money, invest into all kinds of cryptocurrencies, stock market, commodities, and receive residual income. 6. Rinse and repeat the process. I do believe anyone who stacks away $100 per month and invests into cryptocurrency can and will become rich over time. Give it a decade at this rate, but you'll be happy you did. 10 years will pass. Do you want to work your butt off into your old age, or retire with some bucks and a legacy?